Alright, gang, it's your boy Nature, aka Nature. Alright, so we're back for the next lesson, next video, how to use Fibonacci retracement. Alright, so we just went over how to trade Fibonacci, the basis of Fibonacci. So now we're going to go over how to use Fibonacci retracement, okay? So next lesson, how to use Fibonacci retracement. Alright, so how to use Fibonacci retracement. Let's talk about Fibonacci retracement levels, okay? So Fibonacci retracement levels are horizontal lines, okay? So they're horizontal lines that indicate that a possible support and resistance level where price could potentially reverse direction, okay? So that indicates a possible support and resistance levels where price could potentially reverse directions, and they have horizontal lines, okay? This is how we use Fibonacci retracement levels. The first thing you should know about Fibonacci tools is that it works best when the market is trending, okay? When the market is trending up or down, that's when the Fibonacci retracements works best. It doesn't work best when it's consolidating or going or a sideways trend. Okay, so the idea is to go long or buy on a Fibonacci retracement support level when the market is trending up, okay, and to go short or sell on a Fibonacci retracement at a Fibonacci resistance level when the market is trending down. Okay, so support, you're going to when the market's trending up, you buy near the supports. So you're going to look for a retracement on a if it's an uptrend, if you're going long, you're going to look for a retracement on a support level because you buy Fibonacci, you buy on a support. So same thing with Fibonacci as far as a downtrend, you sell at the top of the resistance. So you're going to sell or go short for a Fibonacci retracement resistance level when the market is trending down. Okay, so Fibonacci retracement levels are considered a predetermined or predictive technical indicator since they attempt to identify where price may be heading in the future. Okay, the theory is that after price begins a new trend direction, the price will retest or retrace. Okay, this is how we have Fibonacci retracement levels. Okay, the theory is that after price begins a new trend direction, the price will retrace or return partway back to the previous price level before resuming in the direction of its trend. Okay, so when price retraces, which it always does, we have Fibonacci retracement levels to help find out where price will actually retrace to. Okay, and this is the theory. Price will be when it begins a new direction, the price will retrace or return partway back to a previous price level before resuming in the direction of the overall trend. Okay, so finding Fibonacci retracement levels. In order to find these Fibonacci retracement levels, you have to find the swing highs and the swing lows. Okay, then for a downtrend, you will click on the swing high. Okay, because you sell at the top, so you will click on the swing high and drag it to the most recent swing low. Okay, price you sell is you're selling on a down. If you're selling on a downtrend, you sell at the top. Price will then go all the way down, shoot down. Okay, so for a downtrend, you click on the swing high and then drag the cursor to the most swing low. For an uptrend, you do the opposite. Okay, you buy on support, so you click on the swing low. You click on it on the swing low, and you drag the closer. You drag the cursor to the most recent swing high. Okay, so got that? Okay, because price will if an uptrend, price will go. You sell at support at the bottom, and then price drags all the way up to the high. Okay, so same thing. You will click on the swing low at the bottom and drag your cursor to the most recent swing high. All right, so got that. Now let's take some looks at some examples on how to apply Fibonacci retracement levels to current markets. Okay, so this is an uptrend. This is a daily chart of Aussie USD uptrend. Okay, so we're going to take the swing low and drag it to the swing high. Here we apply the Fibonacci retracement levels by clicking on the swing low at 6955 on April 20th and dragging the cursor to the swing high on 8264 on June 3rd. Okay, as you can see in this picture right here. Okay, this is Aussie versus the US dollar. Alright, so to find the Fibonacci retracement levels, okay, you see how the Fibonacci retracement levels right here, they have horizontal lines. These are the Fibonacci retracement levels, okay. You have 23.6, 38.2, 50, we'll explain, 618, and 764, okay. Alright, and then it has 1,000 at the bottom. Alright, so these is how you find price will, if you're going to an uptrend, price will retrace back to one of these levels. At rather, right now it's at the 23.6. It will retrace back to one of these levels: 38.2, 50, 618, 764, 1,000 before resuming back in the overall direction. Okay, it usually likes to go to 50, 618, and 382. Okay, so let's see what happens after we draw the swing low to the swing high. After we draw the Fibonacci retracement on an uptrend, you draw it from the swing low to the swing high. Let's see where price will retrace back to. Okay, these are the Fibonacci levels. As you can see, they're horizontal lines. Okay, and they have these are the Fibonacci's that we went over in the earlier lessons, the levels. Okay, 23, 38.2, 50, 618, and 764. Okay, so this is for uptrend. You will drag the swing low to the swing high. All right, so let's see what happens. Okay, so here we plotted the Fibonacci retracement levels by clicking on swing at the swing low at 6955. Okay, in on April 20th, and dragging the cursor to swing high at 8264 on June 3rd. Okay, you can see right here the swing low. All right, and we dragged it all the way to the high. All right, which is 8264, and it was at 6955. The swing low and the swing high is now at 8264 on June 3rd. That was April 20th when it was at 6955. Ta-da! So the charting software automatically does this for you and calculates and shows you the retracement levels. As you can see from the chart, the retracement levels were 23.6, 38.2, 50, 61.8, and 76.4. Okay, these are the price that levels that the Fibonacci levels were active, retracement levels were assigned to. These are the numbers that are next to them. Okay, so now that you have the expectation that Aussie and USD, this is for an uptrend. It will for a downtrend too. But we're doing an uptrend. For an uptrend, it will always retrace. For a downtrend, it will always retrace. Okay. All right. So for uptrend, it will retrace at the high and go down on one of the retracement levels before resuming the overall trend. So now that you have the expectations of Aussie USD retrace from the recent high, it will find support at one of these Fibonacci retracement levels, because traders will be placing buy orders at these levels as price pulls back. Okay, the 50% ratio is not officially a Fibonacci ratio, but it will be able to sneak into the group, and it has never left. It was able to sneak into the group and has never left. So now let's look at what happens after the swing high occurs. Okay, so price pulls back right through the 23 level and continues to shoot down over the next couple of weeks, as you can see in this picture. The swing low to the swing high. Okay, so price then, it said price will retrace back. We have a retracement level. Price will either go to the 26, 38.2, 50, 61.8. Okay, before pulling back up, as you can see in this picture, and going towards back in the overall trend. All right, so it pulled back to 38.2 fib level, and it held there. Okay, it held at the 38.2 fib level before it resuming back. It retraced back to the 38.2 fib level, Fibonacci retracement level, before resuming back in the overall trend. All right, so this is very important. This is how you can find out where price will retrace back to, by drawing the swing. If it's an uptrend, from drawing the swing low to the swing high, and then seeing where price will retrace back to. Okay, price will usually retrace back to 38.2, 50, 618. Okay, before resuming in the overall trend. All right, so price pulled back right through the 23.6 level and continued to shoot down over the next couple of weeks. It even tested the 38.2 level, but wasn't able to close below it. Okay, later on July 14th, the market resumed upwards upward, and the move eventually broke through the swing high, clearly eventually broke through the swing high. Eventually broke through the swing high. Eventually, price winds up breaking through the swing high. All right, this is the swing high. Eventually, you can see price broke through the swing high and kept on going further up. Okay, it held at the 38.2 fib level before it resumed back up. That's where price retraced back at. Okay, so this is how do we use Fibonacci retracements to find out where price will retrace at and to get good entries. Okay, if you would have gotten an entry at the 38.2 level, you would have been good. Clearly, buying at the 38.2 Fibonacci level would have been a profitable long-term trade, okay, for you. You would have made a lot of money if you would have gotten at the Fibonacci level. So Fibonacci retracement. This is Fibonacci retracement, not extension, okay? Price will retrace before heading back up. We will talk about extension, Fibonacci extension, in a few lessons later. All right, so now we're doing the downtrend. Now let's see how we will use the Fibonacci retracement tool during a downtrend. Okay, below is a 4-hour chart on a Euro USD. Okay, so to draw this, to get the downtrend of a Fibonacci retracement level, we need to draw from the swing high, because you sell at the top. So you draw from the swing high and you drag it down, because price will, if you're selling at the top, price will sell at the top and it will swing all the way down to the low. All right, so so to define a Fibonacci retracement level on a downtrend. Now, if it's an uptrend, remember, you draw from the swing low to the swing high. If it's a downtrend, you draw from the swing high to the swing low. These are the Fibonacci retracement levels. Okay, 0.64, 0.618, 50, 3.82, and 23.6. Okay, price will retrace back to one of these. Will retrace back to one of these levels. Okay, rather it be the 50, the 60, the 618, 764 before resuming down in the overall trend, which is a downtrend. Okay, price is in a downtrend, but it will retrace before resuming back in the downtrend. This is how we will find out where price will retrace back, is by using the Fibonacci retracement. Okay, so this is how we find out where price will retrace back on a downtrend, is by dragging the cursor from the swing high to the swing low. Okay, and seeing what price will retrace back to. So as you can see, we found that the swing high is at 1.4195 on January 25th, and our swing low is at 1.3854 a few days later on February 1st. Okay, the retracement levels are 23.6, 38.2, 50, 61.8, and 76.4. Okay, price could retrace back to any of these levels before resuming back in the overall direction. Okay, could go back to the 61.8, the 50, the 38.2, the 23.6, or the 0.64. Okay, so price can retrace back to any of these levels. The expectation for a downtrend is that if price retraces from these lows levels, it could possibly encounter a resistance at one of these Fibonacci levels, because traders who want to play the downtrend at a better price may be ready to sell at those Fibonacci levels. Okay, at those Fibonacci levels. So they're going to put sell orders at those Fibonacci levels, rather be 23, 38.2, 50, 61.8, or 76.4. Let's take a look at what happens. Okay, so this is what happens. All right, for the downtrend, price eventually does retrace. It pushes back past the 26, it pushed past the 38.2 and went all the way up to the 50 Fibonacci level and held there before resuming back in the overall direction. If you would have gotten for a sell at the 50 fib level, you would have gotten for a great profit. You would have made a lot of money that day. Okay, so isn't that a thing of beauty? The market did try to rally. It tried to rally and it stayed below the 38.2 level for a bit before testing the 50 level. Okay, once it tests the 50 level, price eventually head back down in the overall direction. If you had some sell orders either at the 38 0.2 or 50 level, you would have made some mad pips on that trade. In these two examples, we see how price found some temporary forex support and resistance retracement levels. Because of all people who use Fibonacci tools, those levels become self-fulfilling support and resistance levels, okay? Because now we're not the only one that uses these tools. So a lot of people place a lot of sell and buy orders on these Fibonacci retracement levels. If enough of the market participants believe that a retracement will occur near a Fibonacci retracement level and are waiting to open a position, and sellers or buyers are waiting to open a position where price will reach those levels, and then all those pending orders, people usually put pending orders, buy orders and sell orders, and could wait for price to hit those Fibonacci levels. This could impact the market completely, okay, and impact the market price completely, okay, because everybody's doing it. So one thing you should take note is that that price won't always bounce from those levels. They should be looked at as areas of interest or kill zones, like the Cyclops kill zones, but we'll teach you more about that later, okay? For right now, these are Fibonacci retracements, okay, and these on a downtrend, it will retrace to one of those levels, and on an uptrend it will retrace to one of those levels. Okay, as far as support, it will retrace to one of those levels before resuming back in the uptrend. And far as a downtrend, it will retrace to one of those resistance levels before resuming back down to a downtrend. For now, there's something that you should always remember about using Fibonacci tool, and that they are not always simple to use. If they were that simple, traders will always place their orders in Fibonacci retracement levels, and the market will trend forever. In the next lesson, we'll show you what can happen when Fibonacci retracement level fails. Okay, so when Fibonacci retracement levels fail, okay, they're not always foolproof. Okay, so we'll talk about that in our next lesson. All right, gang. So I hope this helped. I hope you understand how to trade Fibonacci retracements. Okay, if it's an uptrend, price will retrace to one of these. If it's a downtrend, price will retrace to one of these levels as a temporary resistance before heading back in a downtrend. Same thing with the uptrend. Okay, price will retrace back to one of these support levels. Okay, temporary support levels, whether it be 38 or 50 or 618 or 764. If it goes down to 764, it might be a trend reversal, and we'll talk about that too in our next lesson. But price will retrace back to one of these support levels using the Fibonacci extension. Okay, Fibonacci retracement. Okay, if you draw on the uptrend, it will retrace back to the swing high. If you draw from the swing low to the swing high, and then it will retrace back to one of these fib levels. Okay, before resuming back in the overall trend. All right, so gang, I hope these videos help. All right, this is Fibonacci retracement and how to find Fibonacci retracement, how to use Fibonacci retracements for an uptrend and a downtrend. Alright, so gang, in our next video, we'll talk about how Fibonacci retracements are not foolproof. Alright, and they do fail like any other technical indicator that you use in Forex. This is why you have to put all your knowledge into one. Okay, so in our next lesson, we'll talk about Fibonacci retracements are not foolproof. Alright, gang, so it's your boy Nature, aka Nature. Gang!